Good day, traders. This is Roger Scott from Market Geeks, and today I have another video tutorial for you. Before I begin, I'd like to remind you to subscribe to our video channel for swing trading videos and trading tips, and please don't forget to visit Market Geeks for your free swing trading report. Today I'm going to review one of the most reliable swing trading methods for selling downtrending stocks and other financial markets. Over the last few years, I noticed that traders avoid selling short. This is a big mistake because it prevents you from capitalizing on some of the best trading opportunities that come around just as often as long trading opportunities, with one exception. Aside from numerous studies and backtesting results, all you need to do is look at a chart visually to notice that most financial markets drop much faster than they rise. The reason for this is simple. Markets are driven by fear and greed, and fear produces a stronger emotional response in people than greed. Take a look at the chart and you will see what I mean. In case you're wondering, it applies to all financial markets, such as commodities, futures, and currency markets. If you look at this chart of the Canadian dollar, you will clearly see that it drops much faster than it rises. The descending triangle is one of the most basic technical analysis patterns that was introduced over 60 years ago. The pattern is considered a continuation pattern and resembles a narrowing triangle with a horizontal line of support beneath the market and a descending trend line as resistance level above the market action. You can see from this example exactly what the descending triangle looks like visually. Another great example of a descending triangle chart pattern. Notice once again how highs get lower and the lows bounce off the same price support levels consistently. These two examples should help you visually select descending triangles for short-term trading opportunities. And remember, you can use the descending triangle to trade shorter time frame like day trading or longer time frame like investing. The entry point is the closing price of the first bar that trades completely below the bottom resistance level. You would have to monitor the market you're trading and enter a MOC order, which is a market on close order, when you see a daily bar that's completely outside of the trading range to the bottom side of the triangle. Most brokers accept markets on close orders. The only caveat is you have to make sure that the last few minutes prior to the closing bell, the market doesn't rally quickly back into the support area, especially close to market closing time, when stocks and other markets enter their second most volatile period of the trading day. Here's another example so you can see how the trade sets up. Remember, you always want to enter an MOC market on close order immediately prior to closing. If the market does trade back inside the triangle after trading completely outside of the triangle, but before you enter the order, the trade is nullified. I repeat, if the market does trade back inside the triangle after trading completely outside of the triangle, but before you enter the order, the trade is nullified. The next step is to locate a strategic area for your stop loss level so that you don't get stopped out due to a random market swing. Oftentimes, traders use stops that are too tight and get stopped out prematurely. The best place to place protective stop loss levels when trading triangles is inside the actual triangle. I placed my stop levels immediately above the two of the last bars that traded inside the triangle. I always pick the higher of the last two bars. You can see by looking at the chart exactly where my stop loss placements are located within the triangle. This is another example of a stock that just broke below the support level where the short entry was triggered. Always remember to place your buy stop, that's a buy stop because you're selling short, above the higher of the two bars that are inside the triangle. I hope this short tutorial gave you a good perspective on descending triangles. Next time, I will cover profit targets and show you how to calculate your profit targets when trading descending triangles as well as other swing trading methods. Always remember to place your stop loss orders immediately after you're filled on your entry. And don't forget to enter your entry order as a MOC or market on close order immediately prior to closing the first day the market trades outside of the triangle. That's it for today's tutorial. Thanks for joining us, and don't forget to subscribe to our channel. Please visit Market Geeks for your free swing trading report. This is Roger Scott wishing you all the best in your trading.